On February 12th, 2026, the Chicago Fed warned that the AI ecosystem carries a potential tail risk. It says stress in one AI adjacent industry could spill over into others. If software companies cut infrastructure spending, for example, that could hit the data centers, that could hit the semiconductor manufacturers and the energy companies, and ultimately their ability to repay the bank debt. That's what this is about. We're going to define the legs, the four pillars that are holding this thing up. Let's say the proverbial house of cards. If one leg of that falls, how the rest could come tumbling down. And where we're going to start with that is in the cyclical financing and the revenue streams that seem to be going round and round for each other. So what this really looks like, though, is Microsoft funneling billions into OpenAI, but majority of that is Cloud Azure credits. Then OpenAI will take those credits and pay them back to Microsoft to rent the cloud computing space needed to train those models. Microsoft will then book that as growth from cloud revenue. You following? Okay. NVIDIA, the chip supplier, the biggest one in the world, will then invest massive venture capital, that is, fund these things, into AI model builders like OpenAI and data centers like CoreWeave and Oracle. That's another big one. And then CoreWeave, OpenAI, Oracle will use that same venture capital it just got from NVIDIA, which it got from Microsoft, which it got its sourcing from its computing power to OpenAI, and then it received its funding back from Microsoft and back into NVIDIA and buy billions of dollars of high-end GPUs. All of this gets reported as positive growth earnings. It's saying it just goes round and round, right? That's it. And this is just one example. This makes up the majority of all AI reported revenue. It's not from actual customers or profitable business models. It's from these companies giving each other reach arounds. I forgot I wrote that. It could be as high as 80% according to some sources, which isn't revenue at all. It's an illusion. So in summary, capital from one part of the ecosystem is increasingly being used to finance purchases from another part of the ecosystem. And this is creating a demand that is dependent on continued external financing rather than internally generated free cash flow. Without the machine perpetually growing, it's going to collapse. It doesn't just devalue, it drops. This is what a bubble is. This is what it's what they call when the bubble pops. That's what that means. Then we get into the debt. This makes up a big chunk of that circular cash flow when hyperscalers are burning billions with no actual verified idea of how they're going to turn this into a profitable company.
So sort of amorphous, but it is a business. So I'm just wondering, eventually is the idea to kind of license technologies? Will you have customers that you're going to be customizing algorithms for them, or how is it going to work?
The honest answer is we have no idea. We have never made any revenue. We have no current plans to make revenue. We have no idea how we may one day generate revenue. We have made a soft promise to investors that once we've built this sort of generally intelligent system, basically we will ask it to figure out a way to generate an investment return for you.
It's a fact. They don't. They have some ideas, but they went balls to the wall on this thing and just said, we'll figure it out later. Typical American way of shoot first, ask questions later. History from the 2000 dot-com bubble clearly shows us that when an overbuilt infrastructure doesn't work and doesn't generate any money, the creditors come a-knocking and they want their investment debt secured before any sudden collapse. This is how the dominoes begin to fall, same as any other bubble. The data centers are made up of state-of-the-art semiconductor chips, right? No questions on that. However, the technology becomes obsolete or outgrown after a matter of years. It could be 1 year, with 5 years, it doesn't matter, but that money has to perpetually be rebuilding and growing. You can't just have one thing. You have to be competitive with China and everything else. So it's like the depreciation on the assets of the AI bubble are insane. Hundreds of billions of dollars every couple of years. It's a black hole, dude. It's terrible. How much infrastructure can an industry rationally build when the industry's leading companies are still spending substantially more than they're earning? How does that work? By borrowing more debt. I'm looking at you, U.S. government. And then, on top of all that, how are these infrastructures getting the power that they need? Well, I'm glad you asked. Let me get right into that. When it comes to powering these AI data centers, the bubble hits a physical wall. AI doesn't run on hype, it runs on megawatts. A single data center on the low end can use as much electricity as 80,000 to 100,000 homes. Dog. And they get mad at me when I freaking leave my window AC unit on this summer.
How dare you!
I get a $500 electric bill for that. We currently have 4,000 data centers in the US. The power grids are already strained and they're trying to keep it up. They're like, let's just see how bad we can make this. Push back on nuclear energy at the same time from the public and private equity flowing into that nuclear energy is becoming the next big hurdle these guys got to conquer. So they are pouring. There are some of these companies, I believe it was Amazon or Meta, they are trying to have their own nuclear contracts to supply their own data centers, which is great. But considering they're already investing into this, this is all a literal gamble, guys. So this is becoming the next big hurdle that these corporate oligarchs are having to tackle. I think one of the biggest issues that the corporate megalords are facing is that they're everyday American and the resistance to the AI boom and the data center build out. How long can this sustain at the current rate? Only time's going to tell, guys. But these data centers are swallowing up local water grids, real estate, and of course, they are taking the power that's used for everyday American homes, businesses, cities, whole entire cities worth of power. 4,000 of these things. It's crazy. It's absolutely insane. I mean, but let's get real. The data centers, they're not going anywhere. Even if the bubble pops, they're not going anywhere. AI is going to continue to grow unless Skynet takes over. This is not the end, like a world-ending bubble, but it's going to be just like the 2000s when this thing popped. A lot of turmoil came in the short term, even though the infrastructure for the fiber optics was still being used back then. But this is the house of cards that's starting to show the fragile nature of its bottom structure. I mean, that's the basics of it. The chip makers and the manufacturers, they're hitting a wall too. It's not just, the rest of the market. Everybody's getting some. The chip makers or manufacturers are hitting the wall too. TSM is a primary supplier of these nano quantum mind blasting chips that the AI boom is built on. These chips require helium, of which 35% on average comes from Qatar, which is in the Middle East, which I don't know if you understand, but there's some shit going down over there. The war is screwing up the financial system. Who'd have thought? TSM does have some reserves, 3 to 6 months that we estimate, of a deficit stockpile so they can keep the production rolling even if there is a shock to the infrastructure. But this will eventually bottleneck to a point that even their supplies will run out, especially the growing boom. So you have a growing demand that is perpetually getting bigger and bigger and has to in order to sustain itself. And then you have the very thing that is fueling that, the chips, being bottlenecked by the war in Iran and the only maker in the world that can make it, which is over in Taiwan. What can go wrong, And like I said, guys, this doesn't take the whole thing collapsing. This just takes some things slowing down. That's the truth. This just has to slow down enough to cause a complete collapse of the current hype train. That's it. And private equity to pull out. And this whole sector essentially going down. Tech taking a dump. So the next card in the list is the yen. Oh, yeah, the Japanese currency, baby. It almost seems irrelevant, but it's not. It's really not. It's the most not that's ever nodded, okay? You think of the yen and its global carry trade that's been going on for the last 20 years. It's like a massive global ATM where big money will borrow billions in Japanese yen for virtually zero interest. And then they will take that free cash and pump it straight into U.S. tech stocks and bonds. When the Strait of Hormuz turns into a geopolitical bottleneck, and it has, Japan's energy import bill will spike because the island nation relies entirely on foreign oil, wiping out the trade surplus that they've made from the yen carry trade and then crashing the yen due to oversupply. To defend its currency from total collapse, Japan is forced to step in and tighten its monetary screws, causing the yen to violently spike in value and making those cheap loans insanely, instantly toxic. Simply put, a traffic jam in the Middle East triggers a massive margin call on Wall Street, forcing Wall Street's favorite house of cards, fueled entirely by cheap borrowed cash, to rapidly liquidate the very tech stocks holding up the entire AI bubble.
Oh man. Oh God. Oh man.
The threat is real, guys. This is real. Even if that sounds like a word salad, you got to look into it. I made a video on it. Go check it out. The yen is playing a part in this too. It's another leg in this house of cards. Source, just trust me, bro. And here's the biggest question of all. Who ultimately pays for all of this? Because it doesn't matter how much NVIDIA sells, or how many data centers Microsoft builds, or how much venture capital gets poured into OpenAI. At the end of the chain, someone has to generate enough cash from actual customers to pay for this entire infrastructure. Like, where's the money coming from? And where's it going? It can't just, you can't just borrow debt forever and expect it not to fall, US. If the revenue doesn't grow fast enough to justify the capital that's being deployed, eventually, sooner, possibly, probably, investors are going to stop funding that machine entirely. The wheels will slow down. I told you what happens then. As with any other house of cards in any other bubble, there's a ton of nuance to this stuff, okay? I don't have all the info on it. I just have the major talking points, the major things on it that are being reported. But the integrity of the structure is easy to fail if one of those card supports starts to fail. This is the real threat, ladies and gentlemen. We have built the greatest boom bubble with major pieces of every bubble included inside of it, leading back 50 years, and all it takes is for one of the proverbial trains to slow down that are on this big track for some investors in private equity to get spooked, begin playing defense, and the tower of AI will begin to unravel. Thanks for watching, guys. Like, comment, subscribe. We got so much info to give you. So much info for you, baby. Oh my God, it's amazing. Peace.
I'm afraid that I don't hear a thing.